Good morning, guys. Welcome to today's edition of 600 Seconds of Trading. Today is July 23rd, 2018, and it's a Monday. So I hope you guys had a good weekend and happy Monday to you. We're going to take a look at the markets as we usually do at this time of the day. But before we start, as always, I need to stress that trading financial markets, unfortunately, is risky. And there's a general risk that we'll lose all of our invested money. Please click on the risk assessment statement link here at the very bottom of most pages if you're new to trading and you're not really familiar with the risks of trading. Let's begin, and we're gonna begin with the euro. So on the back of those comments from Donald Trump last week, we saw the euro swing to the upside, and the market has since then really not done too much. It could be a shift towards a weaker dollar going forward, but we can't see an end, though there is no end to this downtrend in the euro just yet. The market is trading sideways between the June low and the July high, and there's no trend to talk about here. And we're heading straight into August by next week, which is the big holiday month in Europe, and most likely we'll see less action, not more action. And then maybe post-September, during September, maybe we start to see things start to move again. Donald Trump, of course, he's the president of the United States. But as you can see, for example, with the Muslim ban or travel ban that they introduced at the end, he had a lot of limitations from the rest of the sort of people that control the power in the U.S. or like judges and so on. And it's quite likely, really, in the case of the Fed, that there's going to be limited impact to the wishes of Donald Trump when it comes down to interest rates and the dollar in the short term, in the long term. So in the short term, of course, you're seeing the dollar weakening, and it could easily continue to weak for a little bit longer. But is this rational to take a long-term bet on dollar weakness on the back of comments of things he can't directly influence? No. So, and you can see that in the chart. There's nothing happening in the chart. We're just back trading sideways. However, though, start to trade above the July high and maybe the pound dollar stabilizes in other markets as well, then yeah, you probably have a trade idea at least. But for now, we need to break at least above that July high. Take out the July high, then we can go up a bit and then probably down a bit and then potentially up again, okay? The next market we want to cover is going to be Bitcoin, and Bitcoin is up today by 4.49%. And we are pretty much at these highs, which is the June 3rd high. So if you didn't book profits on the back of the head and shoulders pattern we discussed here, then this is probably the time. You had a head, left, right shoulder, and the target is pretty much up here for 15% return on the back of a break. Now, if you're a long-term holder and sort of looking for this to head higher, then if we take out the high, which is the June 3rd high, then it does look like we could hit higher. Bitcoin in particular is seeing a nice sort of little push, but we need to take out this high. If we take out this high, which is 77.83, then we could probably head higher, probably up, down, and then probably up again. Other coins, at least last time I checked, were not doing too good. So this is Ethereum against the dollar, and there's not much happening here. We did have a break to the upside here at one point, and did try to take out this high. Actually, we did take out this high, which is the July 8th high, but it never really rendered into a decent trend, right? So the second biggest coin, there's not too much action happening here right now. But obviously, we trade above the high. This market could go up. Look at Ripple. It's as well. It's not a lot happening here. It's trading very close to the June low, and if we take out the June low, then I guess you can guess what's going to happen for the weakness. On the other hand, take out the July high, and we could probably see something like that. Here's Bitcoin Cash. There's not much happening here either. So the push higher right now is not really coordinated, which is a problem because we would like to see coordinated moves. Now that obviously doesn't mean that you can't trade some smaller coins and you can get some nice returns. Like here's Lumen. So Lumen might be added to by Coinbase to their exchange, and when the break occurred here of its July high, right now the market is up with 34%. At one point it was up with 50% from the break. So imagine risking, I think you would have had a risk of about 20% to make 34. It's not that bad, and at one point it was up with 50. It's almost 2 times residual ratio. So there are sections on, there are like sections or pockets of strength, that's what I want to say. But for now, right now, we're not really seeing too much action. But in Bitcoin, yes, it might go up, good opportunity to book profits if you scalp in short term. If you want to keep it for longer, I think I would have done that. I think we can head a little bit higher. Here's gold. Gold moved all the way up, so we had some good initial success. You know, we said sell here, look for the market to trade all the way down to 12.10. We went as low as 12.11. The market has since then bounced back on the back of those comments by Trump, and the market is really close, or was really close to take out the stop loss of the last trade idea. The last trade idea was get involved at 12.60. I said I think the market is going to sell at 12.26 with stops at 12.36, so risk about $30. That's what I think people would be willing to do. And to be honest, it hasn't really worked out yet. We haven't been stopped out. I mean, we're off with about $4 right now, $4.66, and there's some red like warning lights flashing here for me when you see this market almost go up to your stop. When something almost goes up to your stop, it could easily just touch your stop a day later or so. So this is at risk of pushing a little bit higher, and then we would need to see. Remember guys, we're dealing with a downtrend, and you know, maybe it bottoms out, maybe it's just going to rally all the way up, but I think you need to start to see weaker data from the US and sort of a clear shift from the Fed not looking to raise interest rates. Okay, if they all still look to raise interest rates and they remain hawkish, what they were, remember Fed chairman did actually, you know, just hint last week that they're still on track to raise interest rates. So there's no real reason for them to sort of change their biases yet. But if you think the economy is going to deteriorate from current levels, if you think that's going to cause people to reduce their expectations of Fed rate hikes, then yeah, by all means be bullish. But technically, fundamentally, I don't believe that story just yet, and technically it's too early. We have not even taken out the trend defining level. Here is US oil. US oil, there's not much happening here. It's trying to move a little bit to the upside. We're still dealing with a downtrend. Hopefully we'll bottom out here in the next few days and we can do something about it. Right now, remember the last setup was sell here, book profits here. We did that, and this section here, we've been ignoring this market. Here's the German DAX. It moved down quite significantly last week. It's difficult to say what's going to happen next, but in the short term, the trend is bullish, about 12,391. In the big picture, you're dealing with sideways market, and it's doing some sort of pattern. I'm not sure, maybe a diamond or something, but it's definitely trading sideways here, and I think we're better off just ignoring this market until we start to break the highs or the lows. And that's it. Guys, do you have any questions? Please pop them in the little Q&A box. As well, if you're watching this, don't forget to like the video. And good morning to you. Hi, by the way. Click here and then just hit the like button here. It's really important that you support if you like it, because it sends us signals. If people like the videos, if people retweet my things on Twitter, it tells me if I'm on the right track. The same way if I would be trading a trend and I see that I don't get more followers, I don't get more likes, I don't get more relikes, and in fact I get fewer, then that's a sign that maybe I'm doing something wrong. Maybe I should focus on something else. So if you think I'm doing something good, then you should definitely like. If you don't do, then that's fine, because then it's serving its purpose. S&P looks heavy. Let's take a look at the S&P. So high says S&P looks heavy. So let's take a look at it. So this is the S&P, and the S&P, yes, it doesn't have the momentum as it used to have, and it looks like it could potentially look to peak the same way it did here. And I think if you keep an eye on this low here, which is the low from July 17th, if we have a decisive break to the downside here, then that could be the beginning of a decline. If not, then this is an ascending triangle. You know, we took out the high, and you can link it up. This is like pure, this is just a horizontal resistance level, and then you can just sort of do something like this. And the way to calculate the profit target, some people are gonna take the base. I think just working with something in the middle is usually fine enough. So just took from pretty much this level here, and then this is the breakout. This candle here on July 12th was the breakout, and it's unlikely we're gonna hit that target like immediately and very easily, but eventually what this pattern suggests is that we can head to 26.93. The big issue though is that it's summertime, so I'm not sure people are gonna be happy to add a lot of risk. So technically, you know, as long as you trade, I think as long as you trade above the July 17th low, we should be okay, and this market should be able to see the upside. If we're gonna follow this strictly, then stop loss should be going under the July 12th low, and then just remain bullish above that level. A good example of a recent little break here is this section here, and let me just do like this, okay? So this is a more recent ascending triangle, and fib from like this, not fib, sort of triple top-ish, can connect the line like that, and from the low to the high, you project it like this, and you can see that this market has a target of 1742. This is something I traded myself. I bought it here. I didn't actually notice the first breakout. I did just notice it here. So I bought on the 31st of May, and then I kept it not all the way up, but I kept it all the way up here more or less. And then I booked profits. So this one has a target that suggests even higher prices. And again, ascending triangle, we're here, right? And it's the same situation here. We just took out these highs, and hopefully we'll head to the upside. But these long-term projections, I think in general, we're gonna hit maybe, say 17% of the time we're gonna hit those targets, okay? And then after that, we get stopped out at a small loss or a small profit, depending on how you sort of move your stop loss, but it's usually advisable to sort of try to reduce risk when possible. To give you an idea, I'm actually long myself, so I bought pretty much here somewhere, here I think it was, and my stop loss goes here. But I could, if I wanted, reduce it to this low here, which is the same low I just showed you guys, and then it will be a minimal risk. Like, it will be, I think it will be like less than 0.5% or something like that. The biggest problem with this though is that it could spike down, so I'm keeping a close eye on it, and if it has a decisive close below this level, then yeah, definitely I'll be leaving, exiting. So for now, I remain optimistic. I even remain long here. I'm up with about 30% this year, If I can reach 40, 50 this year, then I would be very happy. And it will be an amazing year. Okay guys, I don't have any more questions, so we're gonna wrap things up. I want to thank you so much for joining me, and I'll see you guys tomorrow at 9 a.m. Here at tradecaptain.com. Thank you.